All right, happy Thursday. It's, what do we call this, Friday Eve maybe? Yeah, that's how we get through these days. Thanks for joining us. It's Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy, if you can't tell by now. Let's take a look and see what these markets are doing. I've just gotten the baton from Mr. Tony St. James. He's been kind enough to hand it to me, so I'm here for the rest of the session, and we've got a little bit of a rally here. I mean, it's corn, right? So 2.25 cent rally there is almost limit up, it seems like, right? September's up 2.25 cents to 367.5. We're a penny and a half off the high of the day there. And we've had about, I'm going to call that a 5.25 cent range. Dees, the new crop up to 2.25 cents to 393. 390 is kind of a big level. We got through it overnight, but we've been hanging on just above it right now. Again, we're at 393, and that's a penny and a half off the high of the day. How about soybeans? We had some green on the screen here earlier today too. SEP was up 10.25 cents to 968.75. But that's backed off the high, right? So that's about what? 4.25 cents off the high. We got November, that's up 9.75 cents. That's the new crop. 986.75 is last there. And again, that's 4 cents off the high of the day there as well. We've had a decent range of almost 15 or just over 15 cents. So that'll work, I suppose. Let's move on to the wheat in Chicago. Chicago wheat, that's down just a couple of ticks, right? SEP's off 3 ticks. 513.5 is last there, but still well off the lows of 5.25 cents. So we move out to the March. That's down just 1 tick, 1/4 cent to 562.25. So not a lot going on. At 562.25 puts us at about 2.5 cents off the high of the day. And we've got about an 8 cent range just over. So that'll tell you what's been going on in wheat. That's the Chicago wheat. Let's move on to the hard red in Kansas City. 6.25 cents lower there in SEP to 538.5. Moving on out to the March, 2 cents lower there, 566.25. All right, so that's what's happening in the hard red. Moving all right along, he says, to the spring wheat. Where's that got us pegged? This is a little bit of a mixed bag. We got a penny better in the SEP to 555.5. A half cent lower in Dees to 583.25. And if we move out to March, it's sharply unchanged at 606. And that's pretty much in the middle of a range. It's about 9 cents. We're kind of smack dab in the middle of it. So that's spring wheat in Minneapolis. Finally, let's take a look at cotton and see what's going on there. We got a decent rally of 152 points. 70.07 is last there. We got a 70 in front of it. Only 18 points off the high of the day. Let's bring in our next guest analyst. He's with CHS up in Nimmer Grove Heights. It's Peter Haralambakis. Peter, thanks for being on. All right, brother. What do you got for us? The floor is yours. What say you?
So you're making it sound like these moves are major, right? But in all actuality and reality, we see it every day, right? These grain prices aren't necessarily moving. Whether they're trying to get off their tail in the beans or not, they're struggling. Whether they try to make a move above $4 in the Dees corn, it struggles, right? Staring at the Dees corn, 393.25. Again, we've been in a range for $3.90 to $4 since the middle of July, right? Not necessarily screaming volatility. Isn't necessarily screaming that we're ready to take off and catapult to the 450 level anytime soon, right? I think we had tapped our research team a little while back in regard to, well, what does it look like 10-year span along the lines of a corn observation and price, right? Talking about price, how long it stays under 4.25 and how long it stays above 5.25 over a 10-year span. The corn market has spent 64% of the time below 425, right? It has spent 25% of the time above 525, and it's lingered in the area between 425 and 525 only 12% of the time over the past 10 years. So what does that mean? We're at 393 in the Dees 24. We're at 433 in the Dees 25. Look for these values to be down here, lower for longer, right? Nothing on the board is telling us that it's going to be screaming higher anytime soon, especially when we're looking at yields on the horizon that are looking at 183.1, harvested acres 82.7. Corn production at 15 billion. Carryover numbers are huge. Ending stocks are big. Chinese imports of corn aren't taking off anytime soon, right? China still turning to Ukraine and Brazil for a lot of their product. So again, it's all conducive to lower prices for longer. End users and farmers do start paying attention to these values, and because they're going to start needing to put together their input costs, right? Fertilizer prices are still a little bit higher than where a lot of the end user and farmer likes to be, right? So urea prices out there are leaning in the 308 per short ton value in the September, but further on the curve, we're looking at a 304 for Q4, and a lot of end users and farmers still think that's a little too high, especially where grain prices are. So I guess we kick the can down the road, wait for the Fed, see what interest rate cut is really kind of playing out there, and whether or not we can kind of get a reversal in these grain prices with only a fund short covering out there.
I mean, hey, with the weather we've just had, maybe we just had our summer rally. Who knows? But appreciate you coming.
Potentially.
Yeah, right. Thanks for coming on, Peter. Peter Haralambakis, he's with CHS up in Timber Grove Heights, Minnesota. We're going to go away. Stay right there. We're going to come back, and after we pay some bills, we're going to talk more livestock with me right after this.